Hello there, you're watching IGTV broadcasting from the heart of London as we wrap up an eventful week for the city, with OPEC finally agreeing to cut its production at the informal gathering in Algeria. Meanwhile, Deutsche Bank continues to rattle the markets with fears of contagion after the US Department of Justice talks about penalising Barclays and Credit Suisse as well. So it's safe to say that the entire financial industry is on edge right now. However, we are wrapping up this volatile week and we're now getting set for October with an inflation report from Down Under, more news from Japan after a week of rather miserable stats, and a raft of UK, European and US manufacturing PMI. Australia's central bank will set the tone on Tuesday morning with another rate decision. There's a new head of the helm there now since Glenn Stevens. He left his post as governor and is passing the torch of monetary leadership to Philip Lowe. Other publications include the jobs number, as well as Japan's consumer confidence figure and the UK's construction PMI. Australia kickstarts the trading day again on Wednesday with retail sales. We've got a plethora of European services PMIs expected, as well as retail sales, before we move on to the US reports, including jobs, trade, services PMI and those oil inventories. Thursday's markets will be driven by Australia's trade balance number, Germany's factory orders, Europe's retail PMI and a look at the US labour market. Friday's market session will be shaped by Germany's industrial production, France's trade and production. We've also got British industrial production, trade figure as well on there, and GDP, as well as Canada's unemployment situation, finished off by one of the most important market moving numbers of the week. It's those US non-farm payroll numbers. So that is the economic agenda. Let's move on and have a look at the business report. So this is the corporate agenda for you. On Monday, the flooring specialist James Halstead just there will inform the city of its latest earnings report, and then Seeing Machines as well, which has been gaining ever since announcing its new driver monitoring technology, which the company says could play a vital role in reducing the number of deaths caused by distraction driving. Here is a snapshot of Tuesday's corporate agenda there. We've got Greggs been reporting positive numbers after offering salads, flatbreads, yogurts and fruit pots, more of a healthy alternative. Wednesday, one of the biggest earnings reports comes from the UK supermarket industry. It's Tesco, which is expected to post more encouraging results this time. That's certainly the hope anyway. It'll be interesting as well to hear from Monsanto what they've got to say after its merger announcement with Bayer AG, which, judging by the share price right now, has been rather lackluster. So investors will be looking for more details and encouragement about the merger's completion. EasyJet is to report as well. There's been so much turbulence with this one. The budget airline has been struggling in recent months thanks to uncertainty around the UK trading, the European geopolitical climate, talking about UK referendum result, of course, and of course the terrorism atrocities almost dampening people's desire to travel too. Added to that, there's other factors as well: Gatwick congestion, extreme weather, French air traffic controls. There's a lot of problems going on. On Friday, we don't have any reports. It's going to be a quiet day in terms of business, but it's not going to be a quiet week, and that's why Josh Mahony is here to kind of put it all into context for us. Hello to you, good afternoon. Tons going on. Let's crack start. We're going to have a look at the headlines, just so a reminder for you, a rewind as to what I just went through and the ones that we are focusing ourselves upon. So here we go. Well, we've got tons of PMI stats. Let's talk about the UK ones, Josh, if we can. What are you expecting then? Because actually it's been rather positive in terms of the British economy so far.
Yeah, so we got the initial reaction to that referendum result and we saw this massive deterioration. All of a sudden the Bank of England freak out and they implement this whole massive stimulus measures. And then a month later, all of a sudden we see this big rebound. And now that's where we are. We're essentially in a relatively strong position, and we're going to see whether we can sort of consolidate at these levels, or whether we're going to sort of start moving back into the doldrums. Largely, there's not really any expectations for any significant moves, but generally, actually, when you don't expect any significant moves, and then when you actually see it, that's when you see volatility. So actually, we could still see some big moves. The chart I wanted to show for this is cable. This is the weekly time frame. It shows you, of course, that big referendum move lower. And since then, we've largely been sort of rotating within this range, 128.90 up to sort of 135 kind of area. Now, we are currently at the bottom end of that range, and we can see a little bit clearer on the daily time frame. If I zoom this in a little bit better, you can see that we are near enough at the bottom of this range. Now, if we get a trend line, we can also see that the lows of the week have tried to and failed to break past this ascending trend line. So there's a potential for us to bottom out and start to move higher. Whether that's going to happen or not remains to be seen. Certainly with so many events coming up in the week ahead, it's really going to be pretty crucial to watch out for some of these levels. I would say arguably the most important level to be watching out for the near term is 130.59. If we saw a break above there, then all of a sudden we've got a double bottom formation and we've got the potential for us to actually start seeing a significant appreciation for sterling.
Okay, and I suppose with the British economy right now, it's so sensitive that all you need is one bad data release to kind of send it all in turmoil.
Well, yeah, I mean, you need something that people will grab onto and think, actually, this is a bit of a game changer and this will put the Bank of England on the back foot. Bearing in mind that when we did see Mark Carney drop interest rates to 0.25, he also said at the same time that he expects by the end of the year to be dropping it again, and basically said he wouldn't do negative rates. So that means we're probably going to, or he expected would be down to 0.1% by the end of the year. I don't think that's necessarily going to be the case unless we did see a deterioration again in some of these numbers. So, yes, certainly well worth watching out for.
Yeah, completely. One number that always grabs us here, it's extremely market moving, is of course the non-farm payroll number. And sometimes as well, because it always comes out on the Friday, we have a wait and see approach. Probably won't have that this week because there's tons of other things going on. But the last number was very disappointing, and that meant that we didn't have a rate hike. This number, we're looking between 175,000 and 189,000, which is way more positive, but we're not going to get a rate hike anyway until December. So what's the point of this number? What can we feed into it?
Because I would say that arguably they don't necessarily make a rate hike decision based on one single number. So if we got a couple of respectable jobs reports in these next 2 months, then that could really pave the way for them to actually do something in December. I do think that the Fed actually do want to move, but they're not just going to move for the sake of it. And if the data doesn't point towards them doing it, then it seems a little bit silly for them to constantly hold off when the data doesn't say they should move. And then when it still says they shouldn't move, then all of a sudden they change their mind because they just want to actually raise rates. So arguably it's numbers like this that are going to basically pave the way for what the FOMC actually does or does not do within the end of the year. Like you said, it's really just down to the December meeting. I guess when we look at times gone by, we were looking at 250s, even up to 300 in terms of the payrolls number. I think as we see unemployment rate falling and falling to the sort of long-term sort of equilibrium rate of unemployment, you would think that arguably the number we're looking for the payrolls is going to get smaller and smaller anyway. So previously where we were saying, it's got to be, 200 plus, 250 plus for us to think it's a really good number. Mm-hmm. Well, arguably if this came out 180, 190, people would probably think that that's a respectable enough number for the Fed to actually think that they're willing to move. Also keep an eye out for, of course, unemployment rate, but also the average earnings, which is definitely going to be very key because that's got an influence on where people's perception of inflation is going forward. Mm-hmm. From a charting perspective, I almost forgot about the charting side of things. So this is a weekly time frame for dollar basket. Bear in mind, dollar basket, around about 58% of it is determined from euro dollar. So if we see a big move in euro dollar, you're going to see a big move in the dollar basket, but it also encompasses a handful of other currencies that the dollar's traded against, the likes of the yen, the pound and the like. What we can see here on a weekly time frame is that we've got this very wide ranging range, and we're coming up from the bottom end of this, so you would think we're in the sort of ascendancy phase. Now if we look on the daily time frame, we can see that it has been relatively choppy in terms of this move high, and certainly the fact that we haven't managed to actually gain a sort of any degree of steepness to this rally is a little bit of a warning sign. The fact that we, previously we've managed to jump up above the previous high very quickly, and on this occasion we're just sort of faltering somewhat, that's a little bit of a warning sign. That being said, I would need to see a break below this sort of 94.10 kind of mark for me to think anything other than that we're in a bullish phase and that we're in this recovery phase of this range. Clearly up ahead we've got this sort of very well defined area of resistance around about 96.22 to 96.48. If we can break through that, then I think it's quite likely that we'll get onto 97.62 and higher before long to just continue on this wide range that we have been seeing. But certainly, for the time being, I see this as a relatively I would say, cheap versus some of these other currencies, and it's almost as if this shows a picture of the US dollar that's waiting to bounce back and waiting to come back into strength. You can see that this neckline, this area of support, 96.22, 96.48, would ultimately underpin what looks like a sort of complex inverse head and shoulders formation. So if we did break up above there, then all of a sudden we could see it really hitting the currency markets pretty heavily. You could see the dollar strength story really coming back into the fold. And of course, if we saw a really strong number on Friday's payroll number, then all of a sudden everyone thinks that a December hike's on. That's where you'd likely see that kind of spike.
And we had a lot of movement this week, didn't we, because of the presidential debate. Hillary came out on top and that became bullish for the currency. Yeah,
I mean, it's a difficult one because, when you're looking at the markets, everyone was saying, that the yen's rising and the Mexican peso's rising, and that means that Hillary won, because those are the markets that you would think would fall off if we saw Trump winning. But at the same time, we heard from some of the different pollsters, and that they were saying actually they thought that Donald Trump had won it. So it's a difficult one, I guess. Arguably, who do you believe? Do you believe the markets, or do you believe polls? And we saw with the referendum in the UK that sometimes you can't even believe either.
Absolutely not. And as far as Trump is concerned, there's still a recession. We're in a bubble. Clinton says we're on the way to recovery. So totally different ends of the spectrum.
He's also said that it's the Fed's fault for not raising rates at the same time that he said that they're in recession and that their economics.
He talks a lot of sense, that's for sure. All right, let's talk about Tesco, because it's still Britain's biggest supermarket, but it's got the likes of Lidl and Aldi really competing. This time of year is always interesting as well, isn't it? Because you do get those aggressive price wars. Everyone's gearing up for the Christmas, but we are expecting some good numbers.
Yeah, we're expecting good numbers from a sales point of view, but it's difficult because arguably, so you're talking about like price wars and the like, right? And that's the only area that I can see Tesco's really gaining ground. I don't necessarily know where their next big move is coming from. You can see with Sainsbury's, of course, they sort of decided to buy Argos, and they're sort of really trying to change it up, and they've got some sort of strategy of how they're going to try and break the mold or try and make themselves, the key player in the market. With Tesco, certainly they've got the properties for it, the locations for it, they've got the name for it and the like. But, apart from the idea that they just constantly undercut people, I don't necessarily know where the next big move is going to come. That being said, what we're seeing in terms of price action actually paints a picture of a potential recovery. This is the weekly time frame. What we can see here is that we've got this triangle formation essentially. What we're seeing is price has been going from very wide ranged moves to actually a clear tightening, where we've now seemingly broken out from the apex of that. Now, I've drawn two trend lines here, and I guess people will draw trend lines in different ways, but certainly if I think that people are going to follow two different trend lines, I'll just draw both of them on, and then if it can clear through that area, then that's very notable. And you can see it did do that. We saw last week we managed to get a weekly close up above both those trend lines, but more importantly, we saw a weekly close up above this 178.6. Now that means that essentially you've got this double bottom in play, and it means that you're likely to now see a significant move higher. Of course, earnings have the propensity to be able to move it in either direction. But what I'm saying is we've got a current price of 180, right? And you've got a market that previously was up around about 380s, 390s, right? 2-3 years ago. Now, if we got good numbers in terms of these earnings figures and we got one good day, that should, in my opinion, set us up for a period of strength for Tesco's, and could arguably push us on towards the 250 in a fairly quick succession. So I think we've made the headway as a precursor to these earnings. It's just if the earnings can actually follow through on that and give us another good day or two, then that could all of a sudden make the chart look a lot more attractive, and you should get even more investors coming in.
Okay, thank you very much. I would normally say at this point in time, every little helps, but I'm not going to. I'm not going to do that, okay? Now, that is how the first week of October is shaping up as we head into the fourth quarter of 2016. So we've also got the 15th round of negotiations for the TTIP as well. Have a fantastic weekend. Whatever you end up doing, it is of course beer month. So if you are drinking a beer, do take care. But whatever you get up to, come back at 7:30 a.m. on Monday. Thank you for watching.